I've tried to explain to people, this space is long-term. You tell them, hey, listen, because of the tightening of financial conditions last year, the market's going to start weak. When it happens, it's like, oh my God, what's happening? I'm like, I told you, the market should be weak because of financial conditions. Another week later, what's going on? What they're doing is building narratives to describe why the price action is. So it's like, suddenly they go from, oh my God, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption.
The cycle is unfolding exactly as expected, and Bitcoin's next breakout is drawing near. That's the insight from Real Vision CEO Raoul Pal. After one of the largest recent crypto sell-offs, Bitcoin has rebounded quickly, and according to Pal, this is only the beginning. Momentum is building, institutions are quietly entering the market, and the stage is set for a major breakout. Pal warns that the charts indicate a seismic shift not only for Bitcoin but for the entire crypto market. As capital rotates and macroeconomic conditions tighten, he believes a powerful financial tidal wave is forming, one that will surprise many and reward those who position themselves early. Stay tuned until the end of the video as Raoul Pal explains why the upcoming crypto surge could be the biggest yet and shares what investors should do now to get ready.
Tired of hype and zero value on YouTube? Meet Fefe, a full-time trader, educator, and a thought leader in crypto. He bought his first Bitcoin at 700 USD in 2016, and since then he's built a loyal community by doing most can't. Calls the market direction with unbelievable accuracy, hosts daily live shows filled with the latest alpha on YouTube, drops daily alpha and market updates on Twitter, interviews top minds in the industry, hosts weekly cash giveaway for his community of over 70,000 people. He's also a top presenter at Crypto Banter, one of the largest crypto YouTube channels out there with over 1.2 million subscribers. Click the link below and start following Fefe.
All of our life savings are in this, right? It matters massively. And I get that. So I'm not flippant about that. What I'm trying to do is get people to relax and understand there are ways to do this.
Everyone, without exception, will say, yeah, but Bitcoin is 90K or 100K. If it goes to 200K, I'm only up to 2X. Fuck this shit, bro. I want to make money, right?
No, not yet. Not yet. Because at first, they're coming out of 401k world or investing world, or they've got a bank account and they're getting 5% interest on their deposits, right? The Uber driver. And he's thinking, well, how do I make money? I've owned some, he might have bought a share or two or owns, you know, an ETF. So when you say, well, Bitcoin on average does like 150% returns over the since 2012, but then once you start seeing the rest of crypto, you're like 100%, but that bloke just made 100x. Okay, this is the danger zone now. This is when they start, you know, you talk to them, they're like, I'm all in on Fartcoin. You're like, no. And I try and explain to them is you have to go down that learning journey, do that with 10% of your portfolio, because then you can fuck it up. I'm still holding on to my smoking chicken fish, which was down 90% and is rallying well. I've kept with that meme because, look, I don't have an edge in memes. And as you know, all you end up doing is switching from one narrative to the other at narrative peak, because people are really in the trenches, can see this, and there's a different set of signals they look for. So I don't. So I have, that's the one meme I've got still. Oh, and I own Doge.
Do you still have faith?
Do I still have faith in the chicken fish? Yes. Lord Vishnu will save us, will rise from the ashes. But I don't know and I don't care is the point. It's fun. It's fun to do, and whether Fartcoin's your fun or Whiff's your fun or Bonk, well, it doesn't matter. Just don't let it be a large part of your portfolio, because the probability is something like 85% that it'll go to zero. That's not the only risk. This space is so full of risks. You have to be paranoid at all moments. Because before you know it, you're like, well, I'm buying and holding, so I want to get some yield.
Next one I wanted to ask, yeah.
And then you're on some DeFi protocol that's giving you yield, and something goes wrong, goes to zero immediately. Okay, that is a classic one that happens endlessly. Or you expose your wallet and get hacked. And people don't understand wallet hygiene and how to keep things in different wallets and never expose your key wallets to things, always have a step in the middle, you know, the custody side of stuff. There's so many ways you can get hacked. There's people impersonating me online or you online, trying to get your wallet, or impersonating Coinbase online. Everybody's after your money. And you have to be paranoid at all points. Upside will take care of itself.
Yeah.
So you don't need to worry about, will the market go up over time? As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. And then you need to be paranoid about every single other part. Because don't forget, in the end, we go back to the point I made earlier, everybody's life savings is in this. This is the single most important thing for most people in their financial lives. And there are so many ways you fuck it up by getting a little bit greedy. Does the 6% yield actually matter to you? Oh, but it gives me cash flow. But if I'm 6%, you get 6% and there's a percentage chance of losing all of your money, and you don't know what that percentage chance are. Now, that's not the case with all DeFi or anything else, but it's just that people end up doing dumb shit.
These Bitcoin ETFs with TradFi is going to become a big thing because Bitcoin ETF will want to have yield on their Bitcoin. What do you think about that?
They've dealt with no yield on gold, but they've never owned a lot of gold because there's no yield. So they do prefer it. And, that's why I think when the ETH ETF has yield, which will come, it'll be more attractive to them. How do you get the Bitcoin ETF? Well, it'll be the same as the safest yield will be this kind of borrowing fees for borrowing it. And if it's run by large institutions, you've got some backstop protection. All ETFs have some sort of yield from borrowing that's often taken by the asset manager. I just don't like it because the capital gains is so big. We're not trying to eke out an extra few percent.
By the end of 2025, Pal anticipates there will be 1.1 billion active crypto wallets, a level of growth that's almost unimaginable. He describes this as the fastest accumulation of wealth in history, backed by decades of research and every chart he's analyzed. Everything points to one clear conclusion: liquidity drives markets, and crypto is perfectly positioned to outperform every other asset class. According to Pal, all the conditions are coming together now, signaling that crypto prices are about to enter a parabolic growth phase.
You've got is a yield curve mismatch. So you're able to have short-term access to yield, but really they have to lock it up. So managing that liquidity, and they're smart people, is complicated, and we don't know what can go wrong and when it goes wrong because we've never stress tested it. And that could be a weak point. We've talked about weak points many times. It's like Deribit, who I love, is a weak point because it was 80% of all the option market, or 90%. Now, it looks like they might get bought by Coinbase, which is much better for the market, but we need more options platforms. They need more competition to spread risk. It's the yield enhancement stuff I don't like, and without naming names, but I just don't like them. And they're all smart people, and they're good people, and they're all trying their best. But I think those products should be in the hands of professionals and not retail. I really do.
So only institutions can invest in them, you're saying?
Yeah. To put their capital, because they understand the risks. Where are the counterparty risks, all of that stuff. And if they want to get the extra yield from doing that, great. You're Brevin Howard hedge fund and you've got cash and you want to reinvest that, or you've got crypto holdings. That's your job. But for the average person to see 20% yield and that this is amazing, I'm going to be rich, you don't know what risk you're taking. What I do know is by him doing what he's doing, he's creating leverage in the system. So he's basically, via the convert, selling cheap options. They're being bought by option arbitrageurs, and who are then laying off the option risk on exchange, whether it's against Bitcoin or whether it's against MicroStrategy's listed options themselves. But also, they're trading the NAV versus Bitcoin, which moves around, and that's feeding also within it the perps versus spot, the futures versus spot, all of the arbitrage in the system. And arbitrage uses a lot of leverage because you're making smaller returns, and they use leverage to enhance the returns. It seems right now that most of the buyers of the converts are TradFi hedge funds and others. So there's people like Norges Bank, who are a sovereign wealth. They buy it for just the Bitcoin element of it. But then there's a bunch of Citadel and Millennium and Point72 and all these giant hedge funds, and they're doing the arbitrage. These guys understand risk very well, and they're probably systemically backstopped as well. And their position's not big enough to blow them up. It's who else is going to take the risk for further out the curve that blows up. This market always blows up
Yeah.
from leverage every time. And when people start calling it like the free money machine or whatever it is, it's like, no. And the other thing is, there's a lot of ETFs that are attached to MicroStrategy's, the 2x longs, that creates this convexity, but it also on the way down, MicroStrategy falls more. And then it starts trading at a discount to NAV. And then that blows up the arbitrage people. There's easy ways to see as this thing builds and builds and builds, how it can create systemic risk in the system, in the crypto system, and maybe in the finance system. I'm massively overweight SUI.
Oversold.
Massively.
Can I ask you, percentages wise, more or less?
I'm definitely over 70% SUI, and that's not anything to do with the foundation that I'm on. That's my just capital allocation of my savings. And simple, it's not because I'm on the foundation and people are like, hey, he's just shilling his coin. It's because the fucking chart of Solana, SUI versus Solana broke out, and Solana was the strongest horse in the race. So if another large token is outperforming Solana on like weekly charts, daily charts, significant time horizons, and the chart pattern looks good, and you can see the adoption, and it's got a lower free float, and there's large demand, and there's a lot of developer activity, and all of the things we talked about, then I'm forced to do that. I then also looked at anything versus SUI now, because that's now your benchmark.
Yeah.
And then what's funny is you see, well, there's one token that's doing really well versus it. Deepbook. And Deepbook is the liquidity layer SUI, so I own some of that too. It's really interesting because when you talk to, here in the Middle East right now, you talk to people, they know SUI because it's Facebook. You speak to people and everybody says, yeah, they're really interesting.
Despite Bitcoin's recent correction, Pal insists the cycle is unfolding exactly as expected, with sharp gains followed by healthy pullbacks that weed out weak hands and reset leverage. While many focus on the dips, Pal is keeping his eyes on the bigger picture. Liquidity continues to flow. He, along with others, sees the recent decline as part of a classic dip-then-rip pattern, one that has historically led to rallies as high as 190%. Pal remains strongly bullish, having increased his positions during the last bear market. With institutions quietly accumulating and major funds preparing to enter, he envisions a $10 trillion digital asset class within reach. He believes Bitcoin is on track for a monumental price milestone as fiat currencies weaken and capital moves into crypto. In Pal's view, what's coming next isn't a pause, but a seismic shift. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.